Well, let's bring in Robert Rennie, Westpac's chief currency strategist. He joins us from his offices in Sydney this morning. Robert, I guess there's still some massive shorts on this currency still. How much lower will it go? 118 maybe?
Yeah, look, I think the risks are definitely there, and I think the risks are rising. There's a lot of similarities between this current situation that we're in just now and the GFC. It really feels as if, when you look back at the GFC, it took many, many months before we got the TARP plan. It took many, many months before, ultimately we had the various other bank plans released before we started to see stability. We saw further weakness through October, November, December of 2008 and into February and into March before we ultimately saw the lows for a lot of currencies and a lot of equity markets, and it feels as if we're in a similar situation just now. We've had Europe's equivalent of the TARP plan. It's nobody really believes it. There's a lot more questions than there are answers, and I think the risks that we take out the 123.30 lows that we saw back during the GFC and continue lower down through 120 and possibly into the late teens, I think those risks are certainly rising.
Okay, Rob, so what are you telling investors to do right now? Pile into these shorts still on the euro?
Well, look, I think so. I mean, obviously the levels, draw questions. The euro has fallen through some very significant support levels, and I think you naturally question. But I think an important dynamic that is going on here is that we are genuinely seeing strength in U.S. data. You just mentioned employment in the previous section of the program here. You look at things like ISM above 60. When was the last time that we were above 60 on the ISM in the U.S.? You've got to go back to 2004. Before you see similar levels. We are seeing genuine strength in the US, and I think that is something that is US dollar supportive as well. So it's not just the situation that we see in Greece and Europe unfolding. I think there are arguments for strength in the dollar. So we're certainly advising clients to continue to hold on to long US dollar positions, and that we expect this strength in the dollar to continue potentially for some time to come.
Rob, Phillip here at the markets desk. Yeah, that's a good point you're making, that the strength in the U.S. economy is helping overshadow some of the issues in Europe. But what would it take for the U.K. governments or the U.S. government, or there's Russia, does someone else need to step in to help the euro? It doesn't seem very likely, but it seems to me that the European countries have thrown everything at this issue already, and it hasn't necessarily worked in terms of what the market expects. Is there something else that you would like to see that would change your mind about in terms of where the euro goes short term?
Well, look, I think an important part of contagion is the speed with which it spreads from one asset to another asset, and we saw that through the global financial crisis. We had, obviously the source of much of the volatility was the U.S. economy, but as contagion rippled through global financial markets, ultimately we saw things like trade credit being completely switched off through the Asian region, and effectively Asia collapsed, even though the fundamentals in Asia were so much more positive. I think we're getting closer to the point where we've got to see global coordinated intervention, whether that's variable to start off with, and it's begun to start. The Fed has thrown open its balance sheet. It has reoffered FX swap lines, etc. So we're seeing the beginnings of it. But what I'd like to see is G20, G7 beginning to move and understanding that there is an issue here, and that we do need global coordinated intervention. I'm not saying from an FX point of view, but I mean from a fiscal and from a monetary point of view. That's what markets want to hear, and I think before we see lows or significant lows, that we start to build support levels, I think we're going to have to start to see much more coordinated commentary from the global authorities.
Hey, Rob, before I let you go, I got to talk to you about the RMB, the yuan, because we just heard from U.S. Treasury Secretary Tim Geithner says that stronger RMB would be in China's interest. Of course, he's heading to Beijing for these strategic economic dialogues taking place in Beijing next week. What do you think? Are we going to see some sort of move in the next 7 days or so?
Well, the clock is ticking. It's not obvious to me. On a long-term basis, it's very obvious that a move is in China's interest. But in the short term, it's not obvious to me that a move is in China's interest right here, right now. We're moving into this situation where you're beginning to see some signs of softening in Chinese high-frequency activity data. I watch port data in China very, very closely, and it is beginning to weaken, and that does worry me. It's not obvious to me that we're going to see anything through this week, and that's another concern from a global point of view. The last thing the global economy just now needs is some sort of or increased friction between the US and China. I wouldn't want to see it, and I think there is a risk we're heading towards that.
Okay, Robert, thank you for that. Robert Rennie joining us there from the Westpac Trading.